What if I told you that some of the smartest investors right now are betting against the US dollar, and it's making gold and Bitcoin two of the hottest trades of 2025? In the next few minutes, I'm going to explain exactly why this is happening, what the debasement trade really means, and how a possible government shutdown could make this trend even more powerful. Let's get straight into it, because there is a lot to unpack. The debasement trade is a move by investors to protect their money from a weakening US dollar. And it's not just Wall Street insiders. Everyday investors have jumped on board since the end of 2024, and the momentum is only picking up. But why are so many people suddenly worried about the dollar? Here's the deal. The US government has been running record deficits for years. That means they're spending more than they're taking in by a lot. To fill the gap, they borrow. And to pay for it all, the Federal Reserve has had to keep money flowing and interest rates relatively low, even as inflation picks up. Now, when the government prints more money or takes on more debt, the value of each dollar can weaken. That's what experts mean by debasement. Imagine you have a pizza. If you keep slicing it into more and more pieces, each piece gets smaller. With money, the more there is in circulation, the less each dollar is worth. As the dollar gets weaker, things that are priced in dollars like gold, Bitcoin, and even some stocks can go up in value. That's exactly what we've been seeing. Gold prices have hit fresh highs in 2025, and Bitcoin has been on a wild ride upwards too. Both are classic hedges, ways to protect your wealth when people lose faith in fiat currencies. But there's another wrinkle to this story, the looming threat of a government shutdown. When Congress can't agree on how to fund the government, parts of it can literally grind to a halt. Markets hate uncertainty, and a shutdown is about as uncertain as it gets. Investors worry about everything from missed paychecks for federal workers to delays in government services. Most importantly, though, a shutdown can spook global investors who hold US dollars and US debt. So, how does that tie back to gold and Bitcoin? When investors get nervous about the stability of the US government or the dollar itself, they look for safe havens. Gold has traditionally been the classic safe haven. Humans have trusted it for thousands of years. Bitcoin, while much newer, has been carving out its own reputation as digital gold. Both are seen as assets that can't be printed or easily manipulated by governments. Let's break down some numbers. Gold topped $2,400 an ounce in early 2025, a new all-time high. Bitcoin, meanwhile, surged above $75,000, fueled by both institutional buying and retail investors looking for protection. According to recent data from the Commodity Futures Trading Commission, speculative bets on both assets are at their highest levels in years. This isn't the first time we've seen a debasement trade. Back in the 1970s, when inflation soared and the dollar wobbled, gold prices exploded. Fast forward to the 2008 financial crisis. Again, gold, and later Bitcoin, saw huge inflows. But what's unique now is that both assets are rallying at the same time, and for similar reasons. Let's add another layer. The world is watching the US dollar more closely than ever. It's still the world's reserve currency, used for everything from oil contracts to international loans. But if too many investors lose confidence, they start shifting into alternatives like gold and crypto. That can create a feedback loop. As the dollar weakens, more people buy gold and Bitcoin, which pushes those prices higher, making even more people want in. Of course, there are risks. Gold is not immune to sharp corrections, and Bitcoin is famously volatile. But the underlying driver, the fear of dollar debasement, isn't going away anytime soon, especially with the US running trillion-dollar deficits and political gridlock making fiscal reform unlikely. Experts are split on how far this can go. Some believe gold could hit $3,000 an ounce if the current trends continue, especially with geopolitical tensions simmering and central banks around the world also buying gold. Others see Bitcoin reaching six figures if it continues to be adopted as a mainstream hedge. And what about the government shutdown? If it happens, expect even more volatility. Investors hate surprises, and a shutdown could trigger a fresh wave of buying in both gold and Bitcoin. On the other hand, if Congress pulls together a last-minute deal, we could see a temporary relief rally in the dollar and a pullback in these hedges. So, what's the bottom line for investors like you? The debasement trade isn't just a headline, it's a real shift in how people are thinking about money and risk. Gold and Bitcoin are both riding this wave, and the next few months could be pivotal depending on what happens in Washington and the broader global economy. If you found this breakdown useful, don't forget to like, comment, and subscribe. Let me know in the comments, are you betting on gold, Bitcoin, or sticking with cash? And as we watch these trends unfold, remember, sometimes the best way to protect your wealth is to understand the risks that others are just starting to notice. Stay curious, stay informed, and I'll see you in the next video.